So as the world becomes more and more global, more and more connected, we all get greater access to investing tools. You no longer need to invest in your local property market, you no longer need to invest in your local stock exchange, you no longer need to just buy your local government bonds. So with more access, with more options, then the question is, what do we need to look out for when we're investing abroad? And that is something that I've been receiving recently. Quite a few friends have asked me about this. I'm not from the States. What do I need to look out for when I invest in the US stock exchange? I'm from Thailand. How do I invest in the Singapore stock exchange? I'm looking at buying Australia property, but I'm not from Australia. So what do I do? So today we're going to spend some time to look at 3 things that you need to look out for when investing abroad. And so good morning, everyone. I welcome you to another day with the Financial Coconut. In our podcast, we'll be debunking financial myths, discovering best financial practices, discussing financial strategies that fits our unique life. You get it. Ultimately empowering us to create a life we love while managing our finances well. So today's topic, 3 things to look out for when you're investing abroad. So this question was first given to me by a Burmese friend that I connected while I was traveling. And it's really cool because it didn't occur to me that this was actually a question. Yes, I invest in the US. I'm not from the US. I'm from Singapore. I live in Malaysia. I invest in the States. But it was because I always had access to the US exchange. It's very easy for Singaporeans to open a brokerage and get access to the exchange. And I started investing in the US exchange. I didn't start locally. It was just kind of like the first thing that I did. And yeah, so because that's the first thing I did, it didn't occur to me that, hey, investing abroad has its challenges, especially when you're from countries with slightly more limited access, and more complicated tax structure, etc., etc. So yeah, kudos to my friend and many people that asked the same question thereafter. So because the world is getting so connected these days, you have access to so many different kind of tools to invest in, to manage your money, to try to reap more returns, right? Everyone wants to do that. Everybody wants to make returns when they're investing, huh? Whoever that tell you returns don't matter, you can go and give them one tight slap, ask them why are they investing. But yes, returns matter and everybody wants to make more money investing. And that's why some people, they will invest in emerging markets. Emerging markets are like third world countries or countries that are just younger in the process of growth, which is very synonymous with the ASEAN region, right? A lot of financial people look at the ASEAN region as emerging markets. So yeah, some people like that, and if you like that, cool. If you're around here, cool also. If you're not, it's fine too. Depending on your palate, most people tend to invest locally. Most people tend to invest locally because they feel that they understand the market locally, which is not wrong per se. But if you open your eyes and broaden your perspectives, you will see that there are certain markets that are maybe even more exciting or has historically performed better than your local exchange. So in any case, if you decide to invest abroad, if you decide that, I'm done locally, I want to look further for opportunities, I think there are some things that you need to look out for. And today we're going to talk about 3 of them. And the first thing we're going to talk about is a foreign exchange rate risk. So foreign exchange rate risk is very, very real. Especially if you went through a time of the Asian financial crisis, when the Thai baht came crashing, and the ringgit came crashing, and the Filipino peso came crashing. Everyone came crashing. To give you some added perspective, the Thai baht, at that point in time in the 90s was pegged to the US dollar at 25 baht to 1 US. And after the crisis came down to 56, which means you lost half your value. For every baht that you held, it halved. So even if your investment doubled, you at best, you didn't make a loss. But how many investment tools double in a given period? It takes a longer time than that. And all these things, they are not unique to just emerging markets, right? Just look at Brexit. Brexit sent the pound down, free fall, right? Pound is so cheap today. The pound came down by 20% just because the people voted to do Brexit and leave the EU. So this is a real thing, especially in current times where a lot of things are very choppy. So we got to be very aware of foreign exchange rate risk. And I had friends who experienced investing in the Philippines property market, which they made money, but the pesos came down. So ultimately they lost money because over time the peso got depreciated. So although foreign rate exchange risk is not limited to emerging market, but emerging markets tend to be more volatile in terms of their currency. So developed economies are much less risky in terms of foreign exchange rate risk. But also developed economies tend not to have that kind of growth, right? So ultimately it's really about being aware that there is such a risk and there is such a challenge when you're choosing, the tool that you're going to do. And personally, I invest in the US stock exchange. You should know by now. And yeah, it's a lot simpler because it's a lot more regulated. The currency is relatively stable. You get the idea. Of course, there are a lot of issues with the US economy and a lot of discussion about devaluing its currency, etc., etc. Fair, right? So ultimately, no one is spared from exchange rate risk. No one is spared from exchange rate risk. But developed economies tend to, be less affected by exchange rate risk. So this is something that you definitely need to be aware about, right? Be aware about it and be conscious about it. So it can inform your investment decision. And ultimately, you can make a choice. Which brings me to my second point. Second thing you need to look out for is political stability. Because political stability in a particular country that you're investing, it's going to affect the economy. It's going to affect the exchange rate risk, right? So one of the key factors where a country is stable, in terms of their exchange rate, is that they're stable politically, right? So you look at Brexit, right? They're not stable politically. They want to change. They want to leave the EU. This is a huge thing, It is like you're part of a gang, then now you say you want to quit. Or you're part of the student union and, you are like the vice president of the student union or the president of the student union and you say you want to quit. You get the idea. It is a huge thing, right? So when the country is not politically stable, the exchange rate goes on, a roller coaster ride. So you want to look for countries that are politically stable. It is cool to invest in emerging markets. It is interesting to invest in upcoming economies, cool. But the baseline is they need to be politically stable. You look at Venezuela, you look at Bolivia, you look at, Myanmar, you look at within the region, because of political instability, the currency is always moving. So much so that some countries forgo their own currency and use the US dollar or use the yuan or use the whatever, that they use. So you definitely want to be extremely aware about, the political, climate of where you're investing. You don't need to understand the whole political structure, how things are going, etc., etc. But you need to be able to observe that, maybe in the next 5 years to 10 years to, 20 years is a bit far, but imagine in the next 5 to 10 years, there shouldn't be some uprising in this country. There shouldn't be, some massive change, in the country. You get the idea, right? It's like Hong Kong. You look at Hong Kong now, my goodness. Do you want to invest in Hong Kong now? I don't know, because the Hong Kong dollar is going to go on a frenzy roller coaster ride in the next 5 years. I can double down and confirm with you that there will be no political stability in Hong Kong in the next 5 to 10 years, right? The Chinese will want to have control because rightfully by law, the place of Hong Kong has been returned to the Chinese. Right, but the Hong Kong people don't feel that way. The Hong Kong people want to have, their independence. They want to have that kind of freedom, and that is for them to discuss. But because of this, there is no political stability in the country. There will be no business prosperity, and you will experience a very choppy economy and very, very volatile exchange rate. Right, so the same goes for Britain. If Britain's gonna leave the EU, They're still, Boris just won, but yeah, when are they gonna leave? When are they gonna leave? How are they gonna leave? That's a question. So till the day they leave the EU and actually tide through all these noise and all this, rah shit, right? The pound is gonna go on the roller coaster ride also, right? You get the idea. While you want to ensure that the country they're investing have a stable exchange rate, right? You also want to make sure that there is political stability in this country, because if there is no political stability, chances are, the exchange rate will move like crazy. Of course, if you're a accredited investor, you understand the market. You will not be listening to me. But secondly, if you understand the market, you understand how things go. You also understand that you want to make a lot of profit. You need to go in when there's blood on the street. That's what Dalio said also, right? You wanna make alpha. You want to make more than the market. You want to you be more profitable than other people investing. You got to go in when everybody doesn't want it. But that would call for a very professional analysis. Like, do you think Hong Kong will stable down? What do you think is the future of Hong Kong? What do you think is the future of Britain? Can Britain survive post EU? Right? So all these are questions that takes a lot of caliber and a lot of capacity to then make a bet, right? It's really much more like a bet than investing. All right, so yeah, if you are average Joe just trying to be smarter with your money, trying to be more financially literate, then you want to maybe avoid countries that are going through a political instability. Yeah, it's gonna make life easier for you. Yeah, you will not have an emotional roller coaster while investing in a place where it's really choppy. Yeah, remember that. Which brings me to my third point. Right, you need to understand the legislation of the foreign land. And yes, many people, they will learn about the buying process, how to buy, what are the requirements, but they don't go and check how much to sell, how to sell. But a lot of people want to start their own startups, right? Start their own business. They all know how to register a company, but nobody understands that closing a company is much more complicated. Right? So buying a property, all the salespeople that are trying to get you to buy something, right? They will talk to you all about the buying, but nobody really tells you about the selling. What's going to happen when you sell? Right? What is the post structure? What is the tax structure? What is the legislation of this particular place they're investing when you sell it? Right? So one of the examples are like the US tax dividend. The US tax all dividends at 30% straight. Okay, so if the US company gives a dividend of $1, 30 cents go to the government. You only receive 70 cents, and you don't even need to bother about what do you call that? You don't even need to bother about uploading tax or submitting tax, because they automatically tax already. So by the time the money reaches you, left 70 cents. You get the idea. And in Australia, right, the non-residents no longer get tax rebate. Right? And this has changed since 2018. So you get to see all these different things when you're investing in a particular market. Ultimately, I recommend you not to spread yourself too thin, right? Just choose a few markets that you are interested in, and you take time to develop yourself in that market. That will be the best advice, right? You don't want to do a little bit of Hong Kong, do a little bit of the UK, do a little bit of the States. So my goodness, unless you're full-time or semi-full-time like myself, that means I spend like maybe half the time investing, half the time doing a podcast. You get an idea? If you are just like working hard, trying to create a good life, trying to manage your money smart, I don't think you want to be investing in too many different spaces, especially if they're foreign. Right, and if you're in a country that doesn't have political stability, doesn't have exchange rate stability, maybe like in Malaysia, where the ringgit's coming down, then you want to invest overseas, right? You want to get some hedge, you want to look at some gold, right? So all these different options are out there. Take your time to understand, but I recommend you to keep to one or two at best, right? Don't go and take too many different tools. It's going to be very complicated for you. And these are my 3 points that you should look out for when investing abroad: foreign rate exchange risk, legislation of the foreign land, and political stability. If you understand these 3 things, you tend to be a lot more successful when investing overseas. Right? So I welcome any questions, and I hope you learned something useful today. See ya. Hey, I hope you learned something useful today and truly appreciate that you took time off to better your life with the financial coconut. Knowledge is that much more powerful and interesting when shared, debated and discussed. I hope you would share what you've gained with people you love, and I want to hear from you. Give me some questions and help me along with building our community of financially savvy coconuts. I hope together we can fulfill our curious minds and our desire for clarity. Email me at thefinancialcoconut@gmail.com or message me on Facebook or join our community Telegram. I will do my best to address your questions in a future podcast series, especially if many people are concerned about the same topic. With that, have a great day ahead, stay tuned next week, and always remember, personal finance can be chill, clear, and sustainable for all.